Hi, this is Michael Waits, and welcome back to India Game Changer. Today, we are joined by Venkat Vallabhaneni, a managing partner at Inflexor Ventures. We'll get to the name in a second. Venkat, thank you so much for joining the show. How are you doing today?
Pretty good, Michael. Good to be here.
It is great to have you. I just cannot get the image of that chair. Like, I feel like you should have like one of those driving games. You'd be killing me because I'm terrible at them.
I mean, I love this chair, by the way, right? I mean, I sit most of my time talking with
Right.
entrepreneurs and other things. Oh, this chair is great, actually. Yeah.
Yeah. So my whole goal in life is just to get the same chair I had at Goldman Sachs.
Let me know I need some help.
Fair enough.
Yeah.
Before we get into the main part of this conversation, can we get a little bit of your background for some context?
Absolutely. So I've done my bachelor's in engineering in India from Manipal Institute of Technology. That's called Indian MIT, let's say, right? So,
Manipal Institute of Technology, well done.
Right. So that's where from coincidentally Satya Nadella of Microsoft from, right?
Right. Yeah.
So after I've done my engineering, I went to the US and in 1988. So have done my master's of computer science there and in New Jersey. And after that, after finishing my master's, there are only two ways you can go, right? Either go join AT&T and Bell Labs, or go to Wall Street, right? So I chose the later. I went to Wall Street and worked in a few companies, in Wall Street, and worked on sales and trading, obviously on technology and on different trading desks, and in fixed income. For a few years, I've done that. It's a great learning experience, though a lot of pressure, but great learning experience, right? Working with traders and financial, models and everything, right? So after that, I started my own company in about 2000 and in the US, and that was, again, serving the same clientele on Wall Street.
Really?
So worked with many banks out there, and that company got acquired by a company called Canbay in 2005. Currently, it is part of Capgemini, right? Canbay. So
Yeah.
I was there for a year and a half as part of my agreement with the company, and after that, I was at the crossroads and thought, let me go back to India after 19 years in the US and figure out what to do in India, because at the time India's story was pretty vibrant, right? So, and came back to India in 2000 and end of 2006 timeframe. After coming back here, I started looking at entrepreneurial activities. So I invested in a company called Energy Leader that manufactures industrial batteries. So from software to manufacturing industry in India, that was a great learning experience. But on the hindsight and look back, I mean, that was a tough experience as well, right? Working with
Sure.
the manufacturing is not easy in India, especially in India, right? So raising the funds, working with the banks, and establishing greenfield project,
Yeah.
and getting the required permits, environmental clearances, so many things. And it gave me so much of learning the platform to learn in India how things work, and that got eventually acquired by US based company, right? NYC listed company. And then after that, I went into healthcare in a little bit into telemedicine and connecting the patients with the doctors kind of model in 2009 timeframe, and that was a bit early, and the infrastructure was not there in India at the time, right, for video conference and stuff like that. So it didn't work quite well, but eventually. But one thing that we realized is healthcare in India, when you serve, middle of the pyramid to the bottom, government would be involved, right? So we ended up working with the government, coming up the model where we were serving the patients with working with the government, and that worked very well. Eventually, that company also got acquired by Singapore and US-based US consortium. In the meantime, what happened was I knew some friends in Bank of America in the US, and they were trying to set up technology division in India. So I joined them because it's like entrepreneurship, right? Starting from scratch and building the team. So I was the first guy to join there, and was there for a few years, built the team up to probably 6,000 to 7,000 folks out there, and across different areas, and both tech and some ops as well, operations as well.
Yep.
Great experience working with Bank of America, right? And all along, I've been an entrepreneur working with a small company, and now working with a large company, how things work and stuff like that, right?
I don't feel like you're old enough to have done everything you said.
I'm not old, by the way. So I
Yeah,
mean, so
you're definitely
I
not.
started my career when I was 10 years old.
I was gonna say maybe -3. I want to ask you about this though. How old were you when you went to the United States to get your master's degree?
I was probably 19.
19 or 20 years old, right? So you'd already gone through MIT in India,
Yes.
right? So getting an engineering degree there. And then you go to the United States to get a master's in computer science, right? In New Jersey, at the New Jersey Institute of Technology, a very good school, by the way, in New Jersey.
Yeah.
And then you stay in America for the next 19 years. So you really don't come back to India until you're 40. It mirrors kind of what I did, but just in reverse, right? I left the United States when I was 24.
Right.
And went to a completely different culture and lived in Japan until I was 46 years old. So almost the same amount of time. And I'm wondering, I also worked on a sales trading desk, right? So I sales traded equities and fixed income. I also traded portfolios. So I know what that's like. I think there's a special kind of learning that you get when you're making micro decisions on a moment by moment basis. And you're also processing data extremely quickly in a way that I don't think most people understand. Right. Do you feel like that experience, even if it wasn't for a long period of time, right, that it helps you make decisions today as well, but it also helps you process information in a way that's way more efficient than maybe somebody who didn't sit on a trading desk, if that makes sense?
No, absolutely. I mean, the learning I had in, especially first time I walked onto trading desk in Merrill Lynch, that was a shocker to me, right? Because, it's huge. It's so much noise. It took a while to get used to that. But it's a great experience working across different areas, working with traders. Man, that gave me so much exposure and ability to make decisions, as you rightly said. I think it's unparalleled in my view, right?
So I talk about this a lot for myself, right? Because I lived in Japan from when I was 24 until I was 46, but I look like this, right? So, and I feel free to laugh, right? For sure, because it is kind of humorous, right?
No.
But if you saw me walking down the street, you wouldn't know that I'd lived in Japan for 20 something years. You wouldn't know that I speak Japanese. You wouldn't know that there's this cultural impact on me, but there is. And I feel like there's part of me that has a Japanese sensibility. And I'm curious if you, as a 19-year-old into a 40-year-old, came home and felt like when you got back to India, because I can't live in the United States anymore, but I feel like when you got back to India, which is very different than living and working in New Jersey or New York, you were like, I think I may need to actually reacclimate myself to what being in India is like. Is that fair?
Yeah, it is. It is to a certain extent, because the way I feel that is I have two homes, right? One is India, and other one is the US, because US gave me the career, gave me opportunity to grow and establish myself, right? So two things is I feel like I have to give back to both the countries in a way, right? So. And one of the reasons I came back to India at the time is, because I've been traveling a lot between India and the US even before moving back. So it wasn't a lot of a shocker to me or a lot of, change per se, but the working culture is definitely different, right? I'll give an example, right? Because in when I was working in the US, we start the day probably around 7ish, right? I mean, I came back to India and I joined Bank of America and, whenever, right? And I put up a suit and go at 7. Right. Nobody's there. So the day starts here at 11, but ends here late as well, right? So, I mean, other thing is the decision making, the way people make decisions is quite different, right? And so that's changing today in India right now, but it was very, very different when I came back to India, right? That was a bit of a challenge for me, for sure.
Yeah.
And the time it takes for getting things done, right? In India, while there is a cost arbitrage in terms of labor and other things, but total cost of transaction is probably same or higher in India sometimes, right? If you don't know how to get things done.
Yeah, but again, it's so, and this is what I mean with the cultural differences, right? It's that if you're sitting on a trading desk at Merrill Lynch, or sitting on a trading floor at Merrill Lynch, or where I was at Goldman Sachs and at Morgan Stanley, there is a way to make a decision, and it can, in some cases, can be very abrupt with very little care and concern for the person on the other side of that decision, or even on your side of the decision. It's like, we're doing A, you're going to do it now, and you're going to go at it.
Yes.
But in Japan, that did not work, right? Because
Okay.
that's not the way Japanese people make decisions.
Which one do you think is for you? What do you like? I mean, from your side.
So it's a really great question, and I'm glad you asked it. And my answer is always the same. If I'm playing football, I'm going to learn American football. I'm going to learn how to drop back and throw the ball as far as I possibly can and in as tight a spiral as humanly possible. But if I'm carrying the same shaped ball and I'm playing rugby, I'm never throwing it forward. I'm just throwing it backwards and running as fast as I can. It just depends what pitch you're on.
Okay.
For me, there is no best way. But for people like you and me, for people that are the way we are actually bilingual and bicultural in the sense that you can sit on the floor on Merrill Lynch in New York and just do this, that, and the other thing. But then you can also sit in Bangalore and make a decision in a way that's completely different. And both decisions are right and both are effective. Is that fair?
Absolutely. Absolutely.
Yeah. Here's the other thing. After this entire career, right, that's been amazing, now you're an investor.
Right.
But you've built your own company. I'm curious, the first company that you built, I don't remember exactly what the name was, but you said it was in the same space as sales and trading. So what was that? I'm really curious about this.
The company is called Acuron, right? And we were catering to the sales and trading side of it, doing projects for them on the trading desk,
okay,
right? And working with different banks, and it's a services company, but doing projects on annual basis, or setting up some of the trading applications, stuff like that for the traders, right? That's what we were doing.
And what made you decide to leave a job at a big company and turn into an entrepreneur? Because these are, again, two completely different worlds. Yeah.
Right. I think, that's probably ignorance is bliss, I guess, at that point. I guess, that's my answer, because,
fair enough.
For whatever reason, right from the beginning, I wanted to do my own, company, right? Entrepreneurship has been there in my mind. So at the same time, there was no structural learning for me, to be honest, right? I was technologist and was sitting on the trading desk, but really cash flow management to, the business planning, other things, right? I learned it on the fly, as I started the company and stuff like that, right? So I got into that once I have one thing is I have the mindset of, it's already done, right? Once you start something, it's already done, but that means you're already successful out there, right? Once you have that mindset, things will happen, right? You put the hard work and you do the right things, and things will happen, right? That's what happened for me many times. I've done 3 companies so far, 3 exits, all of them happened the same way. Coming back to India, working in manufacturing company, didn't know anything, right? So how things work. I found a person that can work with me, and again, same mindset. So I think it's very important to have that mindset of, once you take up something, you will achieve it, right?
Yeah,
so
I agree.
Have the battle won.
I often say you can't be half pregnant.
Yes.
Do you know what I mean? So once you've made that leap, you can't go back up to the cliff and go, I don't think I'm jumping. Right? I'm just going to hold on. I think you really have to commit to doing it. And I think that that's part of being successful in business, is just kind of sustaining it longer than anybody else can and being persistent enough to keep going. When you look at India is such a vast and dynamic market, right? And a lot of people that I talk to in the country tell me that even if you go 100 or 200 miles away, you're talking about different food, different culture, different everything.
Right.
As a venture capitalist, right? What is the thesis there for you?
Right. So, we are doing the second fund right now in Flexar. The first fund, I'll give you a little background on these funds as well, right? Please. So after Bank of America, I started investing in companies myself as an angel investor.
Right.
So the problem we face there is really finding good companies, because once the companies reach certain level, they look for institutional support, for next round of funding and stuff like that. So I was not able to find good companies. And then we decided to start a fund anyway, and that too on technology, technology focus fund.
Right.
But a bit apprehensive, because in end of 2015, I think, and the VC ecosystem was not as deep as today, and technology itself, they're not as many funds out there, right? So then we started with small fund, about 20 million, right? So, and I put our own money, my own money, and some friends and a couple of institutions joined us, and invested in 12 companies. It was so much learning over the next 3-4 years, and we were pleasantly surprised by the depth we found in India in terms of technology. Sure. And how the system was evolving, right? So that's a great. Now, at that time, we were doing probably early stage companies. Maximum investment we were doing is $1 million at the time. So we invested in 12 companies, and so far, all the companies are reasonably doing well. And then we started the second fund in 2 years ago. It's around $85 million range, depending on where you stand on the rupee, right around 620 crores. And the system has evolved so much, right? In this fund, we do start with 500K to 1 million if it's an early stage. You can go up to 3 million for the Series A and beyond, right? Overall, we might take up to 5 to 6 million total investment, including the follow-ons and stuff like that too, right? So that's what we do. But as far as our thesis is concerned, we focus on we call that deep tech investments. Right. But deep tech has different connotations, in my view, depending on who you ask. So deep tech in the US is quite different from deep tech in India, because the reason I'm saying that is India itself is a developing nation, and the economy is, probably developing as well, right? One of the US maybe. There is deep tech in the US is R&D and focused, and there's a lot of innovation that can come out of either research labs or somewhere. Right. Whereas India probably is not ready for that kind of innovation yet. That might happen in the future. What we focus on when we say deep tech is the technology from R&D that is ready to become mainstream technology or general purpose technology, right? Let's take internet, right? Internet was deep tech probably in mid-80s. Right. Then became general purpose technologies in 2000s, right? So we focus on those kind of technologies in India that are becoming commercialized as we speak, right? That's what our focus is. On that itself, we look at 2-3 dimensions. One is India for India, where there are companies, innovating on, focusing on Indian market. There we look for the scale. I'll give an example. Sure. We invested in a company called Atomberg. They do energy efficient appliances, starting with fans. When they came to us, they were very small. Now they're doing, probably 600 crores, 600-700 crores every year, which is around 100 million, right? So
it's on 100 million bucks.
And their focus, they got IP, but their focus is Indian market, which has got scale. Right? So that's one aspect. Second aspect is India for global markets, right? India for the US or UK, wherever, right? So that's where we focus on mostly the problems, companies going global with the right, mindset and marketing and sales plan, right? So that's another sector we look for. The software as a service and things of that nature will fall into that, right? The third one is truly deep tech, where we focus on companies very early in the game, where there is a real game changer, right? For example, Electric Aerospace, right? That's what we invested in the space company. They do satellite propulsion systems.
This is Bellatrix,
Bellatrix, right? Great company, a lot of brain power out there, right? So we find those kind of companies and invest them in early stage, right? There are these 3 different dimensions we look at pretty much.
Yeah. Can you talk? So I'm interested in this as well, right? And I want to get back to some of these portfolio companies, because I do want to talk about companies that are changing the game, and maybe even get a company like Bellatrix on the show to learn more about what that deep tech angle is, because it's fascinating to think about satellite propulsion being driven by water, right? It's just super interesting, right? Really interesting to me. What is the benefit for you as a firm, right? Being a multi-stage investor? And I want to frame the question more properly. And that is, so many funds say we just do early stage investing. I always feel like they're missing out on their own ability to help the companies going forward. And you mentioned this in two places, right? You said, even as an angel investor, you can't find great companies because the really great ones want execution help as well, right? So in a way, it means that not only does the companies need to have great teams, but the investors need to be great teams as well. Is that fair, right? So it's a give and take. Yeah.
Absolutely. I think that the question you asked is more relevant in India
Tell
ecosystem,
me.
in my view,
Tell me.
because Indian companies, there's a great talent pool out there, but
Yeah.
they need help in the initial stages, right? Especially the venture capitalists or the investors need to become semi-operators, right? Along with the
Right.
along with the founders, in some cases, right? So I think that would be of great help to share your knowledge and experience with the younger generation and make sure that they are successful.
Yeah. But I also think that if you're investing, I want to get these numbers right, like 400,000 to $1 million in an early stage company. Let's say I'm just going to make up a number, right? Because I know it's the wrong number, but just because the math is easy. Let's say you're taking up 10, let's say you're investing in 10% of the company. So you're making $1 million at a $10 million valuation, just for simple math, people can understand. If you don't invest in the next round, but you still think it's a great company and you're actually helping on the execution side, you're allowing yourself to be diluted. A lot of people don't talk about this, right? So if you invest again, you at least maintain your holding amount, if not get even a little bit more, right? But then you also have another incentive to then help even more. This is why I like multi-stage investment companies as opposed to
Sure.
we just do seed. And that's kind of the point that I wanted to make as well, right? That's important, yeah?
Absolutely. So the way we look at it is, right, when we invest in a company, we look at probably allocating 50% capital for the follow-ons, right?
Right.
Let's say we have $85 million fund, right? In that, I would say 40 million would be allocated towards follow-ons, right? So
Yeah.
what that means is now we bet on the winners, right? That's a way venture capital works anyway, right? Once we know this company, which we'll know in 12 to 18 months, by the way, right? Once we know the company is winning, we need to maintain our share. And sometimes we would like to have super pro rata,
Right.
right? More actually, right? So because as it is, it's hard to find good companies. Once you find the winners, you got to invest in them, right? That's a way we work, and it's a multi-stage investment, as you rightly said. And we'll continue to invest at least three, first one followed by at least two more investments.
At least, right? So it's funny that you say this because one of the trading rules that I learned when I first started trading US government bonds was you always had to know before you went into a trade. This was one of the rules that my boss, Tommy Juderbach, taught us. And he was like,
Right.
Before you get into a trade, know where you want to get out on the upside.
Absolutely.
And know where you want to get out on the downside as well. Like have a stop loss and have it be real and have it be like fixed, because we don't operate in the realm of hope.
Absolutely.
Right. So I don't
many people don't
you.
have stop losses, right?
No, they don't. They don't. They just go like, well, it's close. I'll just let it. I'm waiting a little bit longer. Normally what that means is just more losses. But the flip side of that is let your winners run.
Right.
Because if you're winning, you already have money on the table. Just like let those winners run. It's the same thing you're saying. We know what the winners are. It's pretty easy to identify them quickly. And I like this idea of super pro rata. It's really just going, I want more of this. I've already tasted it. It tastes delicious. I'm having more. Is that fair?
Absolutely. So when we invest in very early stage, we try to get at least 10% from our side.
Right.
If we don't get that, we try to get super pro rata in the next round.
In the next round, yeah.
So that way, at least we have 10 to 15% of the company as we move forward.
Yeah. So if the VC or if the investor is almost like an execution partner at some level, and I loved the way you smiled when you said it, because you're like, money may be a commodity, but execution experience is definitely not a commodity, right? You really need to know how to do this.
Absolutely.
But do you think founders themselves, and you being a 3-time exited founder as well, like what is it like if they're not so open to that? Do you know what I mean? We're like, hey, I had the idea. I know what I'm doing. Or do you find that most founders are like, my idea is great. My ability to build a tech is good. I understand the market, but boy, I'd love some help with X, whatever X is. What's been your experience?
Right. That's a great question, actually, right? So what happens is once we start engaging with the founder or
Right.
our company, before we invest in the company, it takes around 3 to 4 months, right? Because from the initial conversation to writing the check.
Yeah.
And during that time, we spend a lot of time with the founders. And what happens is once the documentation is happening, post the term sheet and acceptance, there's a lot of work with the lawyers and all the stuff, but we focus on business plan and and looking at the people and working with the founders on the kind of help they need, right? So we kind of do a roadmap and say, hey, guys, what do you need, right? And then it's a dialogue and it's a collaboration, and they got to be honest saying that this is the place we need help, and then we identify those gaps and then put either condition subsequent, which is called CS, right? Saying that, hey, you need to hire these kind of people in the next 1 year. We can help you this way, or technology, for example, in a couple of instances where they got technology platform, but that is not scalable enough for in the future. We tell them, look, we can help you here. This is the architecture you can look at. Next 1 year, you got to do that. That's a CS we put in. And sometimes last thing you want to do is become a problem, right? You breathe on,
getting in the way and breathing down people's neck. Yeah, nobody wants this.
Nobody wants it, right?
Yeah.
So identify these gaps, work with them to help them. How we can get better or plug the gaps in the future, right? That's what we do. Right. And generally what happens is after let's say we come in at pre-series or early stage, by the time Series A happens, they know what they're doing. Right. At that time, we let them go, right? Yeah. And then our engagement levels go down. And then next round of investors come in, they take it over, right? So that initial period of 12 to 18 months is where we focus on most of the time.
And do you find that your portfolio companies that actually become successful, with whom you work well together, actually end up in reverse referring you as a team to other founders because they've had such a great experience?
Yes, absolutely. So we take pride in getting at least 20% of the opportunities from referrals from our own founders, right? So that's something we look at as one of the channels for our sourcing, right? Great, works very well for us.
Yeah, it's just so interesting, right? Because so much of the technology ecosystem and startup ecosystem market is focused on, talking about how founders who are successful then invest in other successful founders, which is great, right? Paying it forward or whatever you want to call it. But I also think differentiating oneself in the VC market is also relatively easy to do if you're good at it, right? Because I think I was reading a statistic yesterday that something like 1,100 new funds were founded in the last 3 or 4 years, most of which will end up contributing nothing, right? So being a great VC in a way is like being a great founder. It's super harder than it looks and easy to differentiate yourself. Do you feel like when you go to talk to founders that you haven't met before, do you feel like you have an edge because of all the background experience you have and all the investing you've already done?
Right. No, for sure. So as you rightly said, though I call myself as a startup, right? Though we are investors, we are a startup actually.
I understand.
Right? So, but because we had experience in running the companies, right? I'm an entrepreneur. And that kind of shows up, right? You cannot cheat it. And when you meet the people, they'll figure out it's a two-way street. As much as we are looking for the right people, they look for the right partner. In our discussion, they figure out how we can help them. And in a couple of cases, right? We won over the large funds in the first fund, right? Because they like what they saw.
Right.
And what happens is, more than saying or publicizing that we would help this way, I think doing is the thing, right? Once you help them, and then word of mouth, as you rightly said, it kind of goes. It's a small universe, and people talk, and your reputation gets built up over the period of time.
Absolutely.
So just saying yourself is not going to help, right? You got to show and prove yourself and help the companies to grow.
Yeah. Look, I often say it's not what you say that matters, it's what you do that matters, because that's where your reputation really manifests itself. As you get closer, and I'm just making this up in a way, right? But as you consider raising a third fund, your first fund you said was small. I like how 20 million is small, but it is in the context of venture capital. Your second fund you said was what, 600 and something crores, so around 85, depending on exchange rates. But you made a really good point. You were like, we are smaller, but it also gives us more flexibility, I think, right? Do you want to be $1 billion fund, or do you still want to be like $100 to $200 million fund to have that flexibility?
So we would like to play in early stage, multi-stage investment, as you rightly said, right?
Right.
If it helps, right? If we are able to find companies, would like to come in at day one, right? But it doesn't happen as often, but would like to come in as early as possible and continue to invest in them as they grow, right? At least three rounds of capital, providing capital, right? That's what we want to do, right? But what we want to evolve into we would focus on technology, but we would also would like to focus on cross-border investments. That
What does
means
that mean?
today we are India focused fund,
Yep.
and we can do 25% of our corpus outside India. But we don't have any presence in the US, and and it's hard to find good companies from the US, right?
Well,
Or
if
Europe.
you're not there, it's impossible.
Yeah. So what we would like to do in the future is would definitely grow in terms of size and corpus. That will happen, but we'd like to focus on cross-border. Some companies in the US, obviously with some relevancy to India, where
Right.
we can use some intellectual capital from India and stuff like that. But we want to do the cross-border across different countries and help the companies grow bigger. Right today, it's India market, India for India, India for global. India for global is a little smaller compared to
Right.
India for India. We want to make that switch, and then fund will grow, right, based on the returns you provide. Right?
Right.
If you don't provide returns, you're done, right? So it all depends on your success and performance.
Right.
But our goal is to focus on technology, go global as a fund, just like our companies. Right? And
Yeah. I mean, my expectation was that the India for India is, I mean, obviously very important. The India for Global has been taking place for a couple of decades, right? With some pretty well-known companies, not
Right.
in the VC space, right? For
Mostly on
sure.
the services side. Yeah.
Yeah, mostly on the services side, right? And we know what the names of those companies are. We don't
Yeah.
have to talk about them. But then this idea of the rest of the world into India as well, and India investing in the rest of the world is also fascinating, right? Because as you generate returns, then you can have impact globally as well. And that's actually really interesting.
Yes.
I have one more thing for you before I let you go. Is it hard for you as a guy and probably as a team, right, that are your entrepreneurs yourselves? Do you sometimes feel the itch to say like, and I know you feel like you are an entrepreneur still because you treat your company like a startup. I get it. But there's something a little bit different executionally, right? From building a company with technology, with many, many customers from scratch and scaling that, from running a venture capital company. Is there an itch somewhere that says, oh, I miss that feeling? Do you know what I mean? Of building something from scratch, or do you feel like it's satisfied through the VC world?
No, it does, but I'll tell you one thing, right? I've done so many jobs, right from the Wall Street to working with the manufacturing and other things. Probably this is the best profession I've been into, right? I think
Okay.
I love the job every day, right? Because the main attraction here for me, if I'm running a company, my universe of learning is probably smaller. But in VC world, the learning happens so much, continuous learning. Whether me or even for the younger generation, by talking to them, I can learn so much. Right? That's one thing I love. Second thing is your experience. You can kind of share with the people and help them in a way. That's the second one. Third one is financial benefit. For sure. I mean, if you do the right things, definitely good financial returns, not only for you, but also the LPs. And the network effect you can create is huge in venture capital work, right? So with these benefits, I think I found the right profession for myself for the rest of my life, actually. Yeah.
That is the best way to end. Venkat Vallabhaneni, a managing partner at Inflexor Ventures. That was awesome. Thank you so much for doing that.
Thank you, Michael. I appreciate it. Great to be with you here. Thank you.